Hello viewers, welcome to my channel. I'm Hasham. Last video I have completed 3 problems on valuation of shares. Before that 7 short problems already I have prepared. Hope you have watched the earlier 2 videos on problems and 2 videos on theory. Remember, the problems are based on the theory. First of all, you must be perfect about the concepts. What are shares? Why do we need to calculate the value of shares? What are the methods to calculate the value of shares? All these things I have already explained in 2 theory videos. So if you have not watched, go to the playlist of my channel, select the subject Advanced Accounting New. Select the videos of valuation of shares. Be perfect, then you can easily understand all the problems. Remember, if you want the perfect knowledge, every video is important. Don't give importance to 1 or 2 problems and then leave it. You will not get the complete command. So always keep a notebook, calculator, pen ready while I'm giving the lecture. Note it down. Make a running note. Now, in this video, I'm going to solve 3 problems, 4th, 5th and 6th. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a screenshot of these points, then I'll explain. Now, see the 4th one. Problem number 4. The balance sheet of Piyush Company as of 31st March 2004 is given below. So shareholders fund share capital 6 lakh, reserves and surplus 30,000, long-term borrowings 8% debenture. This is the outside liability. Then trade payable 1 lakh, total assets 7 lakh 80,000, total liabilities. Now assets, fixed assets, tangible assets are 4 lakh 80,000, non-current other non-current assets are 40,000. Current assets, other current assets are 2 lakh 60,000. The balance sheet is tallied 7 lakh 80,000. Share capital consists of 6% cumulative preference shares 1 lakh and equity shares of 10 each 5 lakh. So total capital 6 lakh. And reserves consist of general reserves and debenture redemption reserve. Tangible assets consist of fixed assets at cost 5 lakh, depreciation fund 20,000. So current value of fixed assets are 4 lakh 80,000. Other current assets are preliminary expenses 35,000, discount on debentures 5,000. Ignore. These other non-current assets, preliminary expenses and discount on debentures are fictitious assets. Imaginary assets that should not be considered for calculating net assets. Current assets included in investment 60,000, market price of which is 55,000. In the current assets, investments are included. The value of the investment in the balance sheet was 60,000. But now the business says that the market value has come down to 55,000. The investment value has decreased by 5,000. And these investments are included in current assets. So what we'll do? How much amount is decreased? 60,000 minus 55,000, 5,000. So decrease the value of current assets by 5,000. First adjustment. Debtors included in current assets are doubtful to the extent of 8,000. Again, in current assets, debtors are included. In that debtors, 8,000 are doubtful debts. So we deduct 8,000 because provision for doubtful debts we deduct from debtors. So first of all, 5,000 decrease in investment we subtract. Secondly, 8,000 provision for doubtful debts, that also will be subtracted from current assets. Stock at the end did not include a return of 3,000, though transaction was properly recorded and posted. Sales return was there. When sales return is there, entry was passed. But the sales return goods are not included in the closing stock. That means our closing stock is undervalued. Now we have to increase the closing stock by 3,000. So sales return not included in closing stock. Now we add 3,000. There was a liability of 6,000 which was remain unrecorded. unrecorded liability of 6,000. That also will take it under outside liability. Then debenture interest is owing for 1 year. Outstanding. This is a liability. Interest on debenture is outstanding for 1 year. So we calculate what is the rate of interest on debentures. It is given as 8% debentures. So 8% of 50,000, 4,000. Yes, 8% of 50,000 is 4,000. 4,000 is the interest outstanding that will be taken as a liability. And the preference dividend are in arrears for 2 years. We have to deduct the preference share capital and arrears of preference dividend. Outstanding preference dividend for 2 years. That also will be deducted. Assuming that other assets are worth their book values, calculate the value of each equity share. That's all. So I have explained all the points. Now how the solution of this problem will be. Piyush Company current assets as per balance sheet. In the balance sheet, current assets are given 2,60,000. Now 3 adjustments we have to made to find out the correct current assets. The first adjustment is decrease in the value of investment. Investments are included in current assets. The book value of investment 60,000, but the market value has become 55,000. So 5,000 decrease. Deduct 5,000. So 260 minus 5, 255. Again, debtors. In the debtors, there is a provision for doubtful debts. We may not be able to receive from debtors. How much? 5,000. That provision for doubtful debts also deduct 8,000. Deduct 2,57,000. There is a sales return. Entry is recorded, but the goods are not included in closing stock. Now we have to increase the closing stock. And closing stock is a part of current asset. So we add sales return and not included in closing stock 3,000. So finally, the correct value of current assets are 2,50,000. Now in finding out the intrinsic value, we take 2,50,000. So remember, every problem, some few points are different. Remaining part is completely same. So you should focus on the new points in every problem. In this problem, the new point is this one. So remember. Now we find out the net asset value or amount available for equity shareholders. First we take assets. Fixed assets at cost 5 lakh minus depreciation 20,000. So 4,80,000 is the current value, book value of fixed assets. Now current assets, just now we have calculated 2,50,000. Total 7,30,000. Outside liability 8% debentures 50,000. Interest outstanding for 1 year. So 8% of 50,000, 4,000 interest outstanding. That's the liability. Sundry creditors as it is 1 lakh and unrecorded liability. In the adjustment it is given that one liability was not recorded. Now we record it. Unrecorded liability. Take all the outside liability 1,60,000. Subtract 730 minus 160 is 570. From this we subtract preference share capital and arrears of preference dividend. It is given in the problem. First of all, preference share capital 1 lakh. And it is given arrears of preference dividend for 2 years. So what is the rate of preference dividend? Here it is given 6%. 5,000, 6% preference shares 50,000. Right? So 6% is the rate. 6% of 1 lakh. Preference share capital is 1 lakh. Here it is. Yes, 6% cumulative preference shares 1 lakh. So 6% of 1 lakh into 2 years. 2 years dividend is outstanding. 12,000. Take the total 1 lakh plus 12,000. 1 lakh 12,000. Subtract. You will get 4,58,000 is the amount available for equity shareholders or net assets value. Now we can easily substitute in the formula for intrinsic value. The formula for intrinsic value per share, amount available divided by number of equity shares. So amount available 4,58,000, number of equity shares 50,000, 9.16 is the intrinsic value per equity share. So many problems we are doing on intrinsic value. Hope all my viewers, all my students got a good command on how to find it. It's very easy, not at all difficult. Very easy to understand how to value the shares. Now I am coming to the next problem, that is problem number 5. Determine the value of each equity share according to breakup value method. Remember, breakup value method is nothing but intrinsic value. Different names are there. Sometimes it will be called net assets value, sometimes breakup value, sometimes intrinsic value, etc. As on 31st December 2004 for X Limited. The particulars: shareholders fund share capital 1,50,000, reserves and surplus 173, non-current liability, long-term borrowing 5% debentures 40,000. This is an outside liability. And trade payable 55,000, short-term provisions, provident fund 20,000. Remember, this is also an outside liability. Then total of the liability side 4,38,000. Assets, fixed assets, tangible assets 2,50,000. Intangible assets, goodwill 10,000. Non-current investment 50,000. Other non-current assets, preliminary expenses 8,000. Ignore. This preliminary expenses is a fictitious asset, imaginary asset, not a real asset. Remove it. Don't take. Then inventories 50,000, trade receivable 40,000, cash and cash equivalent 30,000. Total assets 4,38,000. Now notes. Share capital consists of 5,000, 6% preference share of 10 each, 50,000. Equity shares, 10,000 equity share of 10 each. So we have preference shares and also we have equity shares. Now reserves and surplus, capital reserve, profit and loss account, share premium, less deferred revenue expenditure. We don't require this. For computing net assets, we need assets and outside liability. Trade receivable, debtors, good debtors are 30,000, doubtful, not provided for 10,000, total 40,000. That means total debtors are 40,000, out of which 30,000 are very good, recoverable, 100% recoverable, no uncertainty. Whereas 10,000 are those debtors which are doubtful, but we have not provided. We have not made the provision for doubtful debts, 10,000. Now, notes. Preference dividend are in arrears for 2 years, just like the previous problem. Arrears of preference dividend for 2 years. And goodwill is worth its book value. And out of doubtful debts, 50% are recoverable. Here doubtful debts are given 10,000. 50% of 10,000, 5,000. 5,000 is recoverable. So 30,000 is good debtors and 5,000 are recoverable. The total 35,000 will take, not 40,000. Then there are contingent liabilities. Actually, contingent liabilities are those liability which depends on some condition. If the condition happens, then liability will arise. Otherwise, liability will not arise. So it may be liability, it may not be a liability. That is called contingent liability. So normally, while calculating net assets, we should not take contingent liability. Only actual liabilities we should take. But here, what does contingent liability says? Uncalled liability on partly paid shares 4,000. That means this company, this businessman has purchased the shares of a company. And those shares are partly paid up. So whenever the company has called up, we have to pay the uncalled amount. But we don't know when the company will call. So it is a contingent liability only. It is not an actual liability. When the other company makes a call, then it will become real liability. For bills discounted, likely to be dishonored 2,000. This is an actual liability. Actually, bills will be dishonored if the drawee has not honored the bill. Here, the businessman has discounted the bill with the banker, but it is doubtful, it is sure, likely that this bill is going to be dishonored. If it is dishonored, we have to pay the amount to the bank. We have to pay the amount to the bank. It will become a liability. So in contingent liability, two liabilities are given. Amount due on partly paid shares and bills discounted likely to be dishonored. Out of these two, amount due on partly paid share is a contingent liability only. We should not take. Whereas liability on bills discounted likely to be dishonored is an actual liability. We should take into account. That's it. Now, see the answer for this problem. Here, calculation of intrinsic value of equity share, goodwill 10,000, whatever is given in the problem. Fixed assets 2,50,000, investment 50,000, stock 50,000, debtors 40,000 are the total debtors, out of which 5,000 are doubtful. So deduct 5,000. 35,000. Bank balance 30,000. The total of assets 4,25,000. Now outside liability. The first outside liability 5% debentures 40,000. And sundry creditors 55,000. Provident fund of employees 20,000. Bills discounted likely to be dishonored 2,000. This is a contingent liability, but it is given in the problem that it is likely to be dishonored. Then it will become an actual liability. Take the total of liability 1,17,000. So 425 minus 117, 3,08,000. Deduct preference share capital 50,000 and arrears of preference dividend for 2 years, just like the previous problem. So what is the rate of preference dividend? 6%. You see the balance sheet. In the balance sheet, it is given 6% preference shares. The dividend rate is 6%. So 6% of 50,000 into 2 years, you will get 6,000. Take the total 56,000, deduct 56,000, 2,52,000 is the net assets or amount available for equity shareholders. Now simply we substitute in the formula for intrinsic value. Intrinsic value per equity share is equal to amount available divided by number of equity shares. Amount available 2,52,000 divided by 10,000 shares. 25.20. That is the intrinsic value per equity share. That's it. Now I will start the next problem, that is problem number 6. It is provided in the articles of association that at the death of a shareholder, his shares will be purchased by the remaining shareholders at a price to be settled on the basis of the last balance sheet. So one partnership, private company is there, where it is given in articles of association that if a partner dies, then the shares of that partner will be purchased by the other partners on the basis of the last balance sheet. It is further provided that goodwill shall be valued on the basis of 3 years purchase of the average annual profits of the last 5 years. So before calculating the intrinsic value, we have to calculate the value of goodwill. So how to calculate goodwill? It is given on the basis of 3 years purchase of the average profit of the last 5 years. So lastly it is given, last paragraph, the profit for the last 5 years are 15,000, 20,000, 25,000, 30,000, 35,000. You are required to calculate the price to be paid for each share. The profits are given for 5 years and we can see that the profits are showing an increasing trend. Profits are showing an increasing trend. So it is better to calculate weighted average, not simple average. If profits would have been fluctuating, we would have taken the simple average. But when the profits are showing an increasing trend, always better to go for weighted average. So we calculate the weighted average profit, multiply the weighted average profit with 3 years. It is given for 3 years. Yes, it will be valued on the basis of 3 years purchase. First of all, we will calculate goodwill. So since the profits are showing an increasing trend, so we calculate weighted average profit. Year 1, 2, 3, 4, 5, profits are 15,000, 20,000, 25, 30, 35,000. Weights, we have allotted 1, 2, 3, 4, 5. The last year will be taken the highest weight, 5. Now multiply 15,000 into 1, 15,000, 20,000 into 2, 40,000, 25,000 into 3, 75,000, 30,000 into 4, 120, 35,000 into 5, 175,000. Now take the total, 4,25,000 is the total of weighted profits. Now weighted average profit is total of weighted profits divided by total of weights. The total of weights are 15. So 4,25,000 by 15, 28,333.33. This is the weighted average profit. Now goodwill is equal to weighted average profit into number of years of purchase. In the problem, it is given 3 years purchase. So 28,333.33 into 3, you will get 85,000 goodwill. Now in calculating the net assets, we should take the goodwill value as 85,000. Now see the problem. What are the values of other assets? Share capital 2 lakh, reserves and surplus 3,70,000. No non-current liabilities. Current liability are trade payable short-term provisions. We'll see what is short-term provision. Then tangible assets dash. Then intangible assets, goodwill 2 lakh. Don't take this goodwill 2 lakh because we have calculated goodwill. Then non-current investments 3 lakh will take. Inventory is 5 lakh, we'll take. Trade receivable 4 lakh, we'll take. Cash and cash equivalent 70,000, we will take. Balance sheet over. Now notes, share capital, 20,000 equity shares of 10 each. We don't have preference share capital. We have only equity. Reserves and surplus, general reserve P&L account not required. Short-term provisions, provident fund, workmen saving fund, both are outside liabilities. So both provident fund is an outside liability we'll take, and workmen saving fund is also one of the outside liability. Then non-current investments. Investments are given 3 lakh, but the market value of the investment is 2,50,000. So according to prudence concept, we should take the market value. We should not take the book value. So market value of investment 2,50,000, that we will take. That's it. Now see, calculation of the intrinsic value of equity share assets. First asset, goodwill. Same goodwill, 85,000 we have calculated, I have taken it. Investments. The market value of investment 2,50,000 is given, that we have taken. Stock, inventory 5 lakh, trade receivable, debtors 4 lakh, and bank balance 70,000. Total of the assets 13 lakh 5,000 minus outside liability. Workmen saving fund 20,000, 2 lakh or 20,000. Workmen saving fund, it is 2 lakh. And employees provident fund 1 lakh. And sundry creditors 6 lakh. So total 9 lakh outside liabilities. Subtract 9 lakh, we'll get 4 lakh 5,000. Deduct preference share capital, we don't have preference share capital. So 4 lakh 5,000 is the amount available for equity shareholders or net assets value. Now substitute intrinsic value is equal to amount available divided by number of equity shares. It is given number of equity shares as 20,000. So here amount available 4 lakh 5,000 divided by 20,000, you get 20.25 is the value of share, intrinsic value of share. So in this video I have completed 3 problems. Each and every point I have explained. Many points are there which are not written on the board, but you must write in your notes, running notes, so that you will not forget. Example, preliminary expenses is a fictitious asset we have not taken, we should not take. And arrears of preference dividend will be deducted. And interest outstanding on debentures, that will also be deducted. That's all. So hope you are getting a lot of benefit from these videos. If you are satisfied, give a like to the video, share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. And give your comments, subscribe my channel if you have not yet subscribed, and by the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.